Welcome back to Journey Realty Group, your go-to source for expert real estate insights. Today, we're diving into a topic that every investor should fully understand before making a move: the pros and cons of selling real estate investments. Whether you're an experienced investor looking to offload a property or a first-time investor wondering when to cash in on your asset, this video will break down the key advantages and potential pitfalls of selling real estate. Selling an investment property can be an exciting opportunity to realize profits, reinvest, or shift strategies, but it also comes with tax implications, market uncertainties, and logistical challenges. To make things easy to follow, we'll go through 1. The key benefits of selling an investment property. 2. The major drawbacks you should be aware of. 3. How to determine if selling is the right move for you. So let's jump right in. 1. Capitalizing on market appreciation. One of the biggest advantages of selling is taking advantage of rising property values. If you purchased a property at a lower price and the market has significantly increased, selling can yield a substantial profit. For example, if you bought a single-family home for $200,000 in a growing city and within 5 years it's worth $350,000, that's $150,000 gain, excluding selling costs. Timing the market correctly can maximize your returns. However, appreciation isn't guaranteed. Market values can fluctuate based on economic conditions, interest rates, and demand, so always analyze trends before listing. 2. Liquidity and financial flexibility. Real estate is a long-term investment, but selling allows you to unlock cash for new opportunities. Whether you want to reinvest in another property, diversify your portfolio, or fund personal expenses, liquidating an asset gives you options. For instance, if you own multiple rental properties, selling one could free up capital to pay off high-interest debt or invest in another high-yield opportunity. 3. Reducing property management hassles. Not everyone enjoys being a landlord. Managing tenants, handling maintenance, and dealing with vacancies can be stressful. If your property has become more of a burden than a benefit, selling might be the best decision. This is especially relevant for out-of-state investors who struggle with long-distance property management. Selling allows you to move on with less hassle and responsibility. 4. Taking advantage of favorable tax strategies. Selling at the right time can help minimize taxes. One strategy is the 1031 exchange, which allows you to defer capital gains taxes by reinvesting in another property of equal or greater value. Some investors also sell during lower income years to reduce tax liability. Working with a tax professional can help you time your sale for maximum financial benefits. The cons of selling real estate investments. 1. Capital gains taxes and other costs. One of the biggest drawbacks of selling is capital gains taxes. If you've owned the property for over a year, you'll likely pay long-term capital gains taxes, which can range from 1% to 20%, depending on your income. For example, if you make a $100,000 profit and fall into the 15% tax bracket, you'll owe $15,000 to the IRS. That's a significant cut from your earnings. Other selling costs include agent commissions, typically 5 to 6%, closing costs, title fees, transfer taxes, escrow fees, renovation and staging expenses. These can eat into your profits, so always calculate net gains before deciding to sell. 2. Losing passive income streams. If you own a rental property that generates steady income, selling means losing that recurring revenue. For example, if you have a duplex that earns $2,000 per month, that's $24,000 annually. Even if you sell for a profit, replacing that cash flow could take time. 3. Market uncertainties and timing risks. Real estate markets fluctuate, and timing a sale perfectly isn't always possible. Selling in a buyer's market when supply is high could mean lower prices and longer listing times. For example, if interest rates rise, fewer buyers can afford homes, leading to slower sales and lower offers. Holding onto a property too long also carries risks such as higher maintenance costs. 4. Emotional and logistical challenges. Selling an investment property isn't just a financial decision, it can be emotional. If you've owned a property for years, letting go can be difficult, especially if it's been a strong performer in your portfolio. Beyond emotions, the selling process involves preparing the property, negotiating with buyers, handling inspections and appraisals, dealing with financing delays. This takes time, effort, and patience. Before making a decision, ask yourself, is the market favorable for sellers? Will I make a profit after taxes and expenses? Am I ready to give up passive rental income? Do I have a better investment opportunity lined up? If the numbers work in your favor, selling may be a smart move. However, if your property is still appreciating and generating consistent income, holding on to it could be the better choice. 1. Evaluating market conditions. The best time to sell is when demand is high, inventory is low, and prices are rising. If you're in a seller's market where multiple buyers compete for properties, you could sell quickly and at a premium price. However, if home prices are declining or inventory is high, you may struggle to get a strong offer. In this case, it might be wiser to hold and wait for better conditions. 2. Assessing your property's performance. If your investment property isn't generating strong returns, selling could free up capital for better opportunities. Consider the return on investment ROI. If your rental income barely covers expenses or your property requires constant maintenance, cashing out might be the best move. On the other hand, if your rental generates a solid cash flow and is located in a high growth area, keeping it could lead to long-term gains. 3. Comparing alternative investments. Some investors sell to diversify, for instance, moving from residential to commercial properties or investing in REITs, real estate investment trusts, instead. If you have an opportunity to reinvest in a property with better appreciation potential, it might make sense to sell and reallocate funds. 4. Consulting with real estate and financial experts. Making the right decision requires market analysis, tax planning, and financial forecasting. A real estate agent, accountant, or financial advisor can provide insights into whether selling aligns with your investment strategy. Whatever you choose, have a clear exit strategy and a plan for reinvesting your profits wisely. Selling a real estate investment is a big decision that comes with both opportunities and challenges. Whether it's the right move for you depends on market conditions, your financial goals, and your long-term investment strategy. To recap, pros of selling: you can capitalize on market appreciation, unlock liquidity, reduce property management hassles, and take advantage of tax strategies like a 1031 exchange. Cons of selling: you may face capital gains taxes, lose passive rental income, deal with market timing risks, and go through a lengthy selling process. If you're considering selling, take the time to analyze market trends, calculate your true net profits, compare alternative investment opportunities, seek expert advice. Ultimately, selling should align with your financial future and help you achieve your investment goals. Making the right move in real estate investment selling. Selling an investment property is a strategic decision that requires careful consideration of market conditions, financial goals, and long-term investment plans. It's not just about cashing out, it's about making sure your next move aligns with your overall wealth-building strategy. While selling can provide high returns, liquidity, and relief from management stress, it also comes with tax implications, potential loss of income, and timing risks. The key is to weigh the pros and cons, analyze your property's performance, and determine whether selling or holding will bring you the most financial benefits. If you're thinking about selling, take the time to review your numbers, consult with experts, and explore reinvestment options. And remember, real estate is a long game, and the best decisions are those made with a clear strategy in mind. What's your experience with real estate selling? Have you faced any tough decisions? Share your thoughts in the comments below. And if you haven't already, hit that like button, subscribe to Journey Realty Group, and turn on notifications so you never miss out on expert real estate advice. Thanks for watching, and we'll see you in the next video.